Yo, 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 welcome back to the channel. This is JR.
And I'm Leon. Also trying to text, but
Uh-oh. Now you're good. So, we've been away for a while. We've been both productive in our own ends, trying to survive the job market right now. But anyways, we're here to give you some price actions here on Bitcoin. So, and a bunch of other things that we're going to talk about, like Mark Cuban sells his Bitcoin. People are losing their minds on crypto Twitter. Tokenized stocks, they're having some issues with regulatory acceptance, for lack of a better word. Like there's a lot of regulatory scrutiny. And then YC and base batches are putting more money into the crypto startup ecosystems, including BankerBot, which I want to talk about BankerBot for quite a bit there. And then Hyperliquid, its ecosystem is also expanding and, expanding with several features. And Solana's Alpenlow, I'm not entirely sure what that is. We're going to learn about it together, but it's also making a lot of noise. The co-founder and Natalie and the team behind Solana are optimistic about the mainnet rollout as early as Q3 this year. So we have quite a few things to talk about. Have you heard of any?
I think I'm going to have a very negative take on most of this stuff. So let's get into
it. we need to have different opinions. So, let's get into it. Now, I've been developing some features on MintLocke, which we have some things to share here. So this is the app. What's that?
I realized we left this on live.
Wait, what?
I forgot that we left this on live.
What do you mean?
It's live on Twitter.
Oh, nice. Do you want to leave it? Do you want to drop it?
I'm open to either. Like, we can have Corey edit this. But...
No. We'll do it live! Fuck it! Do it live! I'll write it and we'll do it live!
Let's just roll with it. I
fuck
just
it.
Hopped onto Twitter and I was like, oh, hey, wait, the Boost Network is live.
Fuck it. All right, so this is the MintLocke app. Very early. We've talked to some customers in the past. They want X features. Some of them want a Bloomberg terminal, like true DeFi degens. So we're just here trying to identify our ICPs, but in the meantime, we're still going to be building while we talk to ICPs. So this is MintLocke. The original plan is you can automate your finances on Bitcoin autonomously with agent behavior, meaning you can connect, down the road, we're going to enable Telegram connection so that way you can easily text it. I'm also planning on turning this into some sort of terminal and have it a bit more complex of a product, just because most people who don't want to deal with that, all the complexity, they can ideally text the agent, that is the lock agent, and handle all their finances through natural language processing. So let's talk about the markets, in this case, Bitcoin. So this is kind of like the new feature that I'm also showing you, Leon. So let's see. Happy to get your feedback, by the way. I've been building this for the last week and a half. So right now we have the price of Bitcoin. It's sitting about 76,600, give or take. The sentiment with the market is at 38% fear, 38. So it's at the fear level, and it actually makes sense based on what we're going to talk about here today. Let's look at some predictions. It seems very unlikely that Bitcoin will reach 100,000, let alone 150. And if we look at the macro, we're seeing that a U.S. recession, it is unlikely to go into a recession by the end of 2026. I don't think China's going to.
I don't think we can do a recession because essentially our debt is bigger than the GDP right now, or our debt payments will be bigger than GDP. So there's some economists that say, like, if we do have a recession, essentially, like, the world economy kind of hurts. It's disconnected from it now.
How does that correlate to the price of Bitcoin? Maybe you can tell us or tell me.
So this is the harder one, is essentially, and it kind of ties to like Cuban a little bit,
yes.
But all these assets are disconnected from the traditional economy now. Even Bitcoin is disconnected from like what the reason why it flew and the reason why it crashed so heavily is like price action was dependent on essentially some small movers. Now it's all institutional, and the same premise of like Bitcoin's not going to fly and Bitcoin's not going to crash is tied to GDP worth and how that ties into how the economy keeps, stocks keep going up even though like the regular economy isn't growing like at the same pace. Like employees' wages, everyone feels things are expensive. Like it's all disconnected from the traditional economy. It's because institutions move the money, not people anymore. Same thing Bitcoin is. It's not so much. Also, like Mark Cuban sold Facebook at like $30 a share and watched it fly to 380. So that guy's not the brightest in terms of buying and selling stocks or crypto at all these days.
Well, I'm not here trying to defend him, but at least he's still on Ethereum. So I feel like he still has some capacity of belief in the technology and maybe in the ecosystem. But I guess he's just disappointed in Bitcoin's price action, because I also thought for a while, man, given everything with like the fucking war happening in Iran, what's stopping Bitcoin from reaching 100,000? But I guess I was wrong. So, but I want to test something. So,
yeah.
Sorry, go ahead.
Go for it. No,
Okay,
go.
so I want to test something real quick. So I integrated an LLM and I fed it a bunch of data points, predictions, the price action, the sentiment, all these different APIs, and I can generate us a market context on what is driving the price of Bitcoin. So I'm here asking the agent, it's reading the market, and then it'll give us a feed where we can read it. I've been playing with this, so let me know what you think, if this is like a bunch of LLM garbage, but I'm fairly confident it can at least give us a sense of direction of where we're at and why. So here it is. So Bitcoin is sitting just a touch below its average price over the last few weeks, and also just under its average over the last 100 days. So that's kind of like the finance quantified version of it, which together paint a picture of a market that has been drifting slightly but lower over the last month. The fear and greed index reads at 38, which falls in the fear territory, meaning general mood among participants right now leans cautious rather than excited. The 30-day price change of roughly negative 2% reflects the same quiet softness. You can read the rest if you'd like, but one cool thing that I want to share is I was able to translate this as well into Spanish, just because some of our Latin users, crypto's largely more favorable in South America or just anywhere outside of the US. Funny enough, I mean, Hype is largely available, or Hyperliquid is largely available outside of the US, and it's far more popular and far more successful than Coinbase. So, how about them apples? Were you going to say something now, Leon?
No, I was just reading it. I would love more bullet points than that.
Okay.
I think I really like that. Paragraphs are, we're all fucking goldfish and we're all there. I would love like a couple bullet points of like summer, the TLDR version of it, even though that is pretty short. The classic in court Elon Musk. I didn't read it, and then the lawyer saying it was 3 pages, and it still stands. I didn't read it.
No, it's fair. So how about maybe have a TLDR at the top, and then maybe just break it down into bullets in the bottom? Do you think that's better readability?
I like
Okay.
that.
Cool. I'll play with that. So yeah, this is the price of action of Bitcoin shared here on MintLocke. You can learn more at mintlocke.com. If you're watching this live on Twitter, let us know what you think. You love it or hate it. Happy to get your feedback. All right. So why don't we have a little bit of fun? I usually like to trade on events here with Bitcoin, or in Kalshi, but at least not with Bitcoin. So in the next 15-minute mark, which I guess the market just ended, we'll probably circle back here once it's back live. But in the meantime, I want to share with you a post that I saw from Kalshi Twitter. So I'm going to share that here in a moment. All right, so Kalshi Crypto is pretty cool. Just in, 60% chance Bitcoin drops below 60,000 this year. Michael Saylor did not buy Bitcoin this week. And $180 million worth of shorts liquidated from the crypto market in the past 30 minutes. All this is pretty much aligned with the sentiment. Everyone is fearful. Everyone is withdrawing their money. Funny enough, Mark Cuban said, and I can show you the interview here in a moment, like I was able to pull it out. He was saying how gold has actually done better than, anything. So I think it makes sense. For a moment, I thought about maybe I should put my money on gold, but I'd be following the herd because everybody's doing it now. And gold is also very volatile. Like people think, oh, crypto is where all the volatility is. I disagree. Gold is also very volatile, and silver maybe not as much. But I mean, everyone is now moving their money to gold, and this is something that Mark Cuban said. So I don't know if you have any thoughts about that, Leon.
Is gold pretty volatile? Like,
it really is. I mean, you can
is it?
you can look at the price action right now. Yeah, check it out. So
Like, I think it's
I wonder
less
if we-
volatile than Bitcoin, though.
perhaps I still think Bitcoin is very volatile, but my argument is people think gold is not volatile. I disagree. I think I've seen on the markets it's very volatile, but not as volatile as Bitcoin per se.
Yeah, because if you look at gold over the past 5 years, it's like up 138%.
Yeah, so that makes sense. I'm not sure why they don't have a gold ticker here on Twitter. But let's go back to Mark Cuban's interview. Let me know if you can hear it or not.
I think Bitcoin has lost the plot.
You can.
And
Go.
when I started buying Bitcoin, and I've sold all of it, except not all of it, most of it, it was because when all the shit hit the fan, with the Iran war, and Bitcoin was always the best alternative to fiat currency losing its value. And I always thought it was a better version of gold than gold. Well, gold just blew up and went, to $5,000. Bitcoin dropped. And every time the dollar dropped, Bitcoin should have gone up, because if it's priced in dollars, it was cheaper. So anybody from around the world could go pay in dollars, and it just didn't do that.
Not such a hedge.
No, it's not the hedge that I expected it to be. And that was really disappointing. And so I'd say I'm more disappointed in Bitcoin, not as disappointed in Ethereum. And the rest,
irony and
the
not disappointed in
token
Ethereum.
stuff,
Ethereum
the
hasn't
meme
moved
coins,
in-
garbage.
Ethereum hasn't
Dude.
moved in like 5 years.
It's been the same almost. So if you invested about whatever amount in 2020 or 2021, 2021, I
You would
guess.
actually have lost from 5 years ago. You would have lost money, $309 over the past 5 years.
Yeah, because it was like 5,000 and now it's like half of that. So you would have lost 50%.
Yeah, but if you bought May 29th, 2021, it was 2,400. Today it's 2,098. You would have lost money if you would have bought it 1 year or 5 years ago, around this time.
Look at that fucking chart. So, yeah, like the all-time
like,
high, roughly, was November
Most people
13th.
probably have lost money on Ethereum. This is why I don't quite understand his take, because Ethereum's a worse performer than Bitcoin in theory. Because if you look at it 5 years ago for Bitcoin, you at least have some gain on your money, whereas Ethereum you actually lose money.
I think he might be. I don't think he's bearish on crypto. I think he's just bearish on Bitcoin as a long-term strategy. I mean, people still say that Bitcoin could reach $1 million per token, and I think that's right if you look at the mechanisms of it, like the halving, the price action, or like the sentiment, I guess. Right now, we're just at what I like to call the Bitcoin bear cycle, where people are just bearish on it. I mean, just last year it reached 127,000. So we'll probably see something similar after the halving.
I think Mark Cuban has made a lot of bad bets over the past 20 years. Like, I think if
Absolutely.
you look at his view on stuff, like he loses more than he wins. Oh man, it's just like what's that dude on CNBC, the Kramer? I
Kramer
think
guy.
he's just as bad as Kramer.
Wow. I respect that take.
Like,
I don't have
I like
enough
him
knowledge.
in a lot of ways, but man, he's been bad. He sold the Mavs when they were doing their best, and he was like, "Oh, I thought that they would have stewarded the team better." Like he has made a lot of very, very bad bets since he sold to Yahoo. He got lucky with Yahoo. He
He
with
hedged
his bar.
Yahoo.
Well, he hedged Yahoo, but he got
Like, he
lucky
shorted
that
it.
his company sold to Yahoo.
Yeah, like you actually make more money. If I I looked this up. He made more money shorting Yahoo than he actually got from the stocks he got from Yahoo.
Yep.
So I mean, that's funny, but I guess I see your point. Real quick, if you had bought gold, if you had bought one gold ounce, I guess you would have 100x, or what's the fucking you would have 4x, I guess.
Yeah, like
Yes, thank you.
You would have 1.4x, over the past 5 years. But like Ether, like I just don't get his take on ETH at all. Like I think it nullifies his Bitcoin bullshit. But it's also the argument I've made about Bitcoin over the past year is Bitcoin acts more like a new tech stock that just IPO'd that hasn't made its full way around the market than it does as a gold hedge, as like a commodity out there. Like it's not acting like that, and that's why even when we look at strategies, a lot of strategies don't work out because gold, it doesn't act like gold, and it doesn't act like the S&P 500. It acts more like a newly tech IPO'd stock.
When we were first working on MintLocke, I don't know what sauce I was in, but I was telling you, like, dude, we gotta push this MintLocke strategy with EMA with a 20 and 100-day difference. I was very wrong. Bitcoin is still a new asset. That strategy would work with something like gold or even silver, but those are more established, so there's a lot of data that backs it up. Like, hey, these quantitative strategies would work on certain assets. Bitcoin is just not one of them, and I don't think it would work with crypto as a whole, because the oldest is Bitcoin, and even if Bitcoin is too old and is largely accepted by mom and dad, it's still going to be hard to quantify a good investing strategy on Bitcoin. Like, I wouldn't be surprised if ARK Invest, Citadel, Jane Street, if any of those guys like create a meaningful strategy that lets you have more access, more success investing in Bitcoin.
Yeah, I think it's a lot like Forex. Like when you're doing currency exchanges, you're doing it on like high frequency, like large set trades. Like they were doing it on the Japanese yen for a while. There was a bunch of them that do that, and I think Bitcoin and Ethereum are starting to act more like currencies in terms of price movement. It's moving very, very like little, some drops, but I think the problem that most people don't understand is, where does Bitcoin get its value from? It's still kind of intangible. Like a lot of it is it's marketing that's out there. Like the more people that market it, the more people say that it's go to 1 million, the higher chance it has. Obviously, it's a commodity that doesn't. There's no more of it. It gets mined. It takes to get the other half. To get the other half of Bitcoin, it's 134 years. I think there's a lot of upside to it, but I do think it's going to act more like the U.S. dollar. I think it's going to act more like these other currencies around the world, and then I don't see Ethereum flying in any capacity out there.
I like the ecosystems. There's a lot of L2s that I prefer over Ethereum, so that's where I'm coming from, and maybe that's the correlation I made with Mark Cuban's opinion. But I guess time will tell. But why don't we talk about tokenized stocks? There's a lot of noise going around there. So one thing we've been very bullish on personally as well is tokenized stocks. I think the biggest problem that we're seeing with the current stock market, whether you're in China, US, Japan, you name it, one, they're geo-locked. If you're outside of the US, you cannot capitalize on investing in Anthropic when they IPO, or even SpaceX, or even some of the more established ones like Google or Tesla. So it being tokenized makes it so anyone around the world can invest in these companies, and also us here in America, we can invest in Japanese or Chinese stocks, you name it. So that's one very bullish thing about it. Also, the liquidation, I don't think it's any different because stocks have high liquidity, but the other thing is they would be available 24/7. You don't need to wait for market hours to open in order for you to
I don't think any
invest
company
right away.
wants that. I
So
don't think
that's
any
the thing.
company wants a 24-hour, because you have like companies all the time, even the United States plays economic warfare. The reason why the Iran war pauses during the week is so the economy can fly and then takes off over the weekend because the stocks are closed. You can't trade and you don't crash a whole economy. I think the tokenized stocks is a real risk to some of these companies. For example, if you can dump stocks on a Saturday at 10 p.m. and Microsoft gets hit with some sort of zero-day hack, like you could create a whole company overnight. And I think a lot of these companies are looking at how do they protect their investors and how do you actually deal with this. Like the whole U.S. economy is based around how the stock market trades from so often to so often. It's extended more and more after hours and all of that to retail traders, but traditionally it's like 8 a.m. to 5 p.m., 9 to 6 roughly, East Coast time. And if there are trades that essentially take the S&P too far down, there's tripwires. If it's like 20% down, it stops all trading. Like, how do you do that with tokenized assets to prevent the U.S. economy from cratering like in the 1900s with the Black Friday or whatever it was, where the whole stock market crashed and everything. I think
Black Monday, you
there's
mean?
not enough
In the 80s?
protections in these tokenized. Yeah, no, it's the Black Friday, like 1929. Is it 1929 when the stock market crashed?
Oh,
Let's
yes.
look it up real quick.
Yeah, for the beginning of the recession, everyone was borrowing money to buy
Depression.
stocks.
Black Friday.
Yes, the depression.
1929. The
Yes,
Mystique,
Black
the
Friday
post-holiday
depression.
emotional, it's low effect, all of that stuff. The stock market crashed and everything essentially cratered. The Great Depression, and it all came from there. It was in the Black Thursday. Were traded on the exchange, and they were mostly sold. So how do you prevent something like that happening with the tokenized asset? Like the U.S. economy is not one of free trade completely. It is controlled trade.
So I'm generally a very optimistic person, and I think it's good having you in my corner because you're like the reality check kind of guy, and I think it works. I think it's good to have both, dynamics when it comes to a subject. And with tokenized stocks, I realize there's not as much as I know based on what you've said. I'm like, man, I wasn't even thinking about that. It sounds like having high frequency and high access to stocks, meaning it becoming globally accessible, it would only increase frequency as well as the liquidation or just access, I guess. That's actually counterintuitive, and therefore, part of the reason why these companies are pushing back. Because as far as I know, I always thought companies would only push back because they just don't want more people to have access, more equity, for lack of a better word, on their company. Because when you buy stock, you obviously hold a small percentage of that equity. But I guess that's just not the only reason.
No, I think there's a lot more to it. Like if you create a stock, like sometimes you have loans out against those stocks. Sometimes there's all these like mechanics around stocks that are there. There's voting rights. How do you control voting rights? How do you do that?
Yeah.
I think some of that stuff would work much, much better on tokenized stocks. But I think the parts that these companies are more worried about is how do you prevent synthetic stocks, wrapped versions of them? How do you prevent bad actors from buying these without KYCs? Because you could, like, essentially, if somebody's buying up a bunch of shares, there's poison pills to stop people from taking over a company. There are mechanisms to make sure that you know who's buying 5% of a share. Like, the whole thing around Twitter was, and the whole fight about Twitter being a public company was Elon was buying up shares, didn't disclose it, and then he had controlling interest in some capacity, and they were about to poison pill him, and stop
I remember that.
So, like, there's a lot of these mechanisms that are built around 100 years of trading. I don't think it's wrong to want innovation, and I don't think it's there. I do think the one time is, okay, how do you stop all that? Because essentially, if you let a tokenized stock go out there, you could secretly buy it up. Like, do you still have the same rules on those tokenized stocks on disclosing that you own 5%? like all these things. I think you need somebody to go and say, hey, like the Nasdaq, hey, if you want to tokenize your stock and all of our, blockchain, the whole essential exchange is now tokenized. I think that's the way to do it. But again, you need the ability to pause trading. You need the ability to allow for poison pills. You need the ability for these companies to KYC everybody. I think there's a lot of protections that are built into normal stocks that are not going to be on the tokenized side.
Okay, so a couple of things. You mentioned a while ago, and we've talked about this extensively. You mentioned what you think, and where I'm actually agreeing with you is maybe this would be more accessible given all these, legal concerns, especially with like the way a company would operate. Maybe we have some giant provider like the Nasdaq or, the NYSE being the ones issuing the tokenized version of that, maybe like a Nasdaq wrapped version of a stock. I think that would be more acceptable in a public sentiment. I mean, public sentiment is, hi, I can buy Google on my Phantom wallet, but it coming from an issuer that is established like that would make it so, hey, this is actually a legitimate thing. There won't be any issues, the ones that you mentioned, because it's within a legal framework.
Yeah, I think
that
that's
still
the big
applies?
part here is because the traditional finance experts warn removing trades from established exchanges like the Nasdaq and New York Stock Exchange could cause price divergence, resulting in uneven pricing for the same underlying asset. I think that's the biggest part because once you take it and you have a tokenized asset in a self custody wallet, like how do you how do you make sure that price stays there? You're going to have all these exchanges doing it. And then the lost shareholder rights, I think that's a big one. Investor protections and oversights. Like, I think, and I hate to say this in many ways, I do think you need to have all of this here to make sure tomorrow that, like, that whole GameStop run, or, like that whole thing on GameStop, like there was essentially synthetic shares of GameStop, out there, and people were trying to squeeze Citadel, people were trying to squeeze all of these providers. Like that stuff could happen way, way more often out here. And
That's a good point.
I like the SEC is correct to pause and reflect. The crypto space is full of scammers and incompetent people who totally screw this up. Give them too much slack. This process needs to be methodical to protect the capital of retail institutions from the unscrupulous morons. I don't totally disagree with this. I do think
me neither.
There's a degenerate part of the internet, and you see it every single time. If you ask the internet to name a school, you name a boat, anything, you're gonna get it to be named McBoaty McBoatface or McSchoolface.
Literally.
Like the
So many
internet's
internet
just
trolls.
gonna not take it seriously. And I could see this going very bad, and essentially, an insurance stock, somebody gets mad at insurance, the retail investors could go buy all of it and then dump it and screw everybody and screw, not only a large class of institutional investors, but cause these large third world effects from that one failure. So I think there needs to be a lot of protections to ensure the economies of the world, which is the United States government, keeps on flowing.
I mean, fintech is one of the most largest, highly regulated industries in the world, more so than like healthcare in some ways.
Yeah.
When you're dealing with people's money, stakes are high, and it makes sense. We were talking a while ago, and this is probably my last point, about when we were talking to some of the ICPs, some of the customers for MintLocke. We discovered that a lot of them just simply don't want DeFi. Anything that is outside of Bitcoin, maybe this is for the Bitcoin maxis, they just don't believe in the financial system, but yet they still use a bank account. They still rely on these other things that is heavily regulated. I think we can wish for this anarchy type of financial ecosystem, but you're going to have to be outside of the grid for that because you just can't operate on a day-to-day basis with just having a financial system that gives you immense freedom. In many ways, there's not enough freedom, but it keeps everything on check. It keeps the world running, and that's just how it is. And if people don't like that, then they can just go to Madagascar or go to some other place, outside of the ecosystem. I don't know why I thought Madagascar, but
you do need rules. Like I think
you do need rules.
Think rules and regulation and all of that. It sounds bad, and there's possibility for regulatory capture where key companies, you regulate too heavily, and key companies win. But to protect the broader economy, you need to ensure that like 3 kids in like Russia aren't going to take down the whole economy with some posts and tokenized stock buys and leverage out there. Like you have to vet it. You have to look at this on there. I think once these exchanges figure it out and they centralize it in some capacity, tokenization makes a ton of sense. The fact that you want to know who buys everything, when it was sold, when it was bought, who bought it, who votes, a blockchain makes a ton of sense. It's just you need to make sure it's controlled very tightly, and I could see one chain winning, like Chainlink, and it being the only one that you're allowed to do it, and they control and centralize it very heavily.
Well, they would win largely because their infrastructure and everyone is using them, and they're also doing a lot of things that are convenient, like enabling cross-chain liquidity and cross-chain assets to be interoperable. So it makes sense. I think Chainlink would be one of the top winners. I don't know if their token would reflect that, just because its token hasn't done a lot. Funny enough, Hype has done so much better, which we can get more here later, but I think that's about it for tokenized stocks. We'll see what happens. Meanwhile, I want to talk about base batches, and I want to also talk about YC, BankerBot. This is kind of like the little bubble that I live in, so I want to share a little bit of what goes inside of my bubble. But I mean, probably I'm not the only one. Probably it's the Silicon Valley people who are very into this world. So anyways, I'm going to share this. Give me a moment. There we go. Okay, so a few days ago this week, base batches, it's the third iteration of all the base batches. They had a lot of companies who were part of the accelerator pitching their company, talking about their influence on base and just kind of what kind of value they're bringing to retail investors and perhaps some businesses, because some of these are also B2B. So I'm guessing this guy was in the audience. We see Brian Armstrong, who was also presenting, which I thought was pretty cool. I know Jesse, the founder of Base, was also there. Here are some of the companies that were on the Base batch. A lot of them, you can guess, are doing agentic, some sort of prediction interlayer onto Base. And
not heard of about a single one of these. Crazy.
There are some notable ones. I think Opal, Flow, Onsite. Onsite is predictions. Flow, if I'm not mistaken, it's peer-to-peer payments. Opal, it's kind of like an exchange on Base again. I could be wrong, so I need to double check that. But it wasn't some sort. I mean, I've been in some accelerators and not accelerators. I've been in some startup programs, and this didn't seem like some sort of pitch competition. It seemed more of like YC demo day, where you go up stage, you have a lot of investors sitting on the crowd, and they just find investments, which is really cool. I think that formula is very sticky. I think it works in this side of the world because, I mean, YC, it's one of the largest accelerators in the world. It's kind of like more than that too at this point, but demo day is what happened, and it was pretty cool from what it seems. I don't think there was any large follow-ups. I'm going to see if I can find more about it here in a moment. But the thing that I want to get here is there's a lot of movement happening on the crypto side of startups. I think if YC is doing, if VCs and YC do one thing, everybody follows suit. Right now, everyone is pouring a lot of money into agents, into AI. Funny enough, the top firms like OpenAI, Anthropic, I want to say Grok, XAI, they took 80% of all VC capital in the last few years. So that's kind of massive. That means everybody wants to be early on AI, but also everyone is kind of doing the same thing to an extent or another. So I'm guessing this is one company, BlockRun AI. Yeah, this is one company, BlockRun AI. This one's pretty cool. Right now, agents can't make phone call or buy a premium API as credit cards block them. BlockRun AI uses X402 plus USDC on Base to settle per call. One of my favorite Base batch teams. So it's pretty cool. It's like doing kind of like niche peer-to-peer payments or enabling B2B businesses. I'm sorry, B2B token or API usage with USDC, which I thought it was already accessible. I mean, AWS recently came out saying they now enable X402 USDC payments. So
Yeah,
maybe these guys are streamlining
I think all
it.
the agent stuff is going to be enterprise. I don't think you're going to see very much stuff on the consumer side. Like, nobody wants micropayments to be, every time you read a thing, 35 cents, 30, 40 cents. Like, nobody wants to do that, I think.
Yeah, no,
I also think there's a hype cycle here on the agents and stuff. I think if you ask most people, like, I think when you saw it recently, everyone talking about AI at the commencement speeches during colleges, it getting boos out there and all of that. I think there's some part of this is going to be, electricity scared everybody, horses to cars scared everybody. The internet did it to some extent, but I think this is the first real time where everybody's just like, oh no, I don't think we want this everywhere. And I think tech is just shoving it down everyone's throats, and we're going to land with it. And I love AI and use it and all of that, but I could see some of this stuff being just landing on the enterprise side. Like, nobody's going to be, using it to pay, micropayment for your electricity every single moment of the day. Like, I don't see that happening. I see it happening maybe on like API calls and, Twilio, all of the back end things where, businesses do it, but man, businesses still want cash flow. Like, if they're having to pay for every single time they use the API versus, loading some money up and keeping, it on hand, I'm very skeptical right now where it lands. I do think there's a usage to it, but I'm very interested in like all of this stuff because it's all going enterprise side, and I'm like, man, where is the consumer stuff for this?
I saw on Twitter here and there that people, Jesse Pollack was on an interview and he was saying how, again, kind of like echoing the sentiment that they're doing, which is agents are gonna run all our money and everything. I still think that maybe these people are playing 4D chess, or that they have like 2030 vision, because people who are the most evangelical about whatever thing they're building, they sometimes end up being the most successful ones down the road because they had enough conviction. So maybe in the future we'll find out. Maybe we're just not smart enough to realize it, but I do think still that people still want to worry. They don't want to pay with Doge, or they don't want to pay with Solana to get their groceries. Maybe that's very few amount of people who are very understanding of what tool they're using, but for your average Joes and Janes, which is what everybody's building for on crypto, like they want to onboard the next billion people on crypto, I think we still fail to understand that people sometimes just want cash flow, to your point. Not just businesses, but also most retail people, they want to buy groceries, not with like Dogecoin or whatever. And if you do, that's a very it's a very small category of people who want to do that, but most people just don't care, is my argument. But why don't we dissect, here what some of these teams are on Base. We applied, but we didn't get in. So I want to see who made it on Base.
I'm CEO of Liminal. We're building a new kind of bank.
My name is Akash. I'm the co-founder and CEO of Formica.
And I'm Maiva. I'm co-founder and CTO of.
We're building the clearing layer for agentic microtransactions.
I'm Jia Jian from the founding team of Agently. We are the routing and settlement layer for the Asian economy.
My name is Vicky, founder of BlockRun. I'm building a agent payment gateway.
I'm Alex from Flow Labs. I'm co-founder and CEO. We're building credit layer and working capital for AI agents.
That's really
My
big.
name is Joey Roth. I'm building Forecast, a leverage layer for prediction markets.
I'm Danny, co-founder and CEO of JPEG. We're building a social prediction game on Base.
This is Nico, co-founder of Nevo, on-chain FX hedging platforms.
My name is Tommy, the founder here at OnSite, and we're building the social layer for prediction markets.
My name is Clemens, and I'm the CEO and co-founder of Opal, a privacy-first perpetual DEX on Base.
I'm Abhi, and I'm one of the co-founders of Tomorrow, a fully on-chain credit marketplace.
That was pretty cool. I like their visuals, but I think Four Labs is the one that I was kind of massive on. I saw it earlier this week, and they're doing on-chain credit. I actually thought I wanted to build something similar back in 2023, but I ended up building something else. But I think on-chain credit's actually kind of massive because people want to leverage some of their assets. Like people want to leverage their Bitcoin to buy houses. Getting a loan against your Bitcoin was very hard until recently. So on-chain credit could be massive. You know, that's one thing that I'd be very bullish on compared to most of these people. There's another thing that I want to talk about, and it's YC and crypto recently. So let me see if I can find it.
I have thoughts on this too.
So before you get to that, this is recently from YC. We're now providing crypto deals to support fintech builders funded by YC, support on tools like wallets, on-ramps, audits, blockchains, on-chain data. So what's interesting, and Phantom was never funded by YC. Rainbow Wallet was funded by YC, so I'm surprised they didn't include it there. And instead they included some of these tools that are not even provided by YC. So I don't know. I found that very interesting. I don't know. I have thoughts, but
I'm not too surprised. Like, I think it's probably companies that have enough ability to, do stuff. But also, doesn't YC have a fund afterwards that they outside of their main fund? Like, you don't have to go through YC to get funded by YC sometimes.
There's several options as far as I know. I don't know the specifics, but to say the least, yes. So, if you want to look at this, you want to read this, you're more than welcome. They have a Google Sheet, a Google form on their starter pack and deals. So I guess to answer your question earlier, here's one example. YC deals offer to teams already accepted or funded by YC only. We encourage these deals to have the following: at least $10,000 in value with a 2-year expiration, 1 year free services, and a 50% discount for 2 years. I think this applies for some of these tools. I think it's cool. You had some thoughts you wanted to share?
No, outside of that, I think it's really interesting. Like, essentially, they're just. I think this is the same thing as the OpenAI stuff. Like, I think YC is going to use all this data and kind of fund the next future of things. Like, you might be a YC company right now, but they're going to fund your competitors more and more. Like, I think that's all they're going to end up doing.
Whatever makes the most noise. I know A16C, you mentioned it, you told me before that A16C is one of those VCs where, or I don't know where I found this, but they fund you, and if you are not making enough, I guess, movement or hitting your goals and everything, they're just going to stop supporting you and they'll kind of just drop you. I kind of saw this with DSO back in the day when I was building on it. I can't say much beyond that, but I think it's just the way these organizations operate. If you're not providing enough value, if you're not moving forward with your company, eventually they're just going to stop supporting you to some capacity.
More and more they bet on, they no longer just bet on one company that could capture all of it. They're betting on all three. It's just like everybody's invested in Anthropic and OpenAI. Like, everybody's betting on that company in there. Like, before, you would only bet on Coinbase. You would never invest in Kraken too. But now they're investing in Kraken and Coinbase and Crypto.com and all, they're investing in every single one of you.
Hedging 101, Startup Edition.
Yeah. It's more common.
Yeah, so that makes sense. I guess it's just not very obvious, so you kind of just need to understand, and if you know, you know. So the last thing I want to talk about in this subject is BankerBot. In the base ecosystem, BankerBot is this agentic. I've used it before. It's an agentic trading tool where it's kind of like a wallet, but you can do a lot more than that. Like you can, in natural LLM way, you can tell it to swap a token, maybe put some TWAPs as well, some TWAPs, and it'll do it for you. And if it fails, it fails. It'll tell you why, and then you can follow up on that. I think it's a pretty cool product, kind of like the vision that I have for MintLocke, but more strategy oriented, more less leaving it on your hands, more hey, we're here to help you. If you want to save up for a goal, such as buying a car, maybe saving up for a vacation, you can do it here. You can just tell us what your goals are, and then we can give you like some sort of strategy to get to that. And then you pay $5 a month, all said and done. That's kind of like the vision of what we're doing. So anyways, I'm having a hard time finding it. I guess I didn't save it, but BankerBot released they're committing money and capital to companies building on the BankerBot ecosystem on Base. So I think that's cool, and it's kind of like the whole point here I'm trying to make with talking about like all this capital and all this investments into crypto is if you were building crypto back in 2023 or 2022, nobody would have given you money. Now it seems like there's an influx of capital going into crypto and fintech startups, which I think it's largely influenced by AI because agents moving money is very appealing, very appetizing. You know, if you read that 2025 State of Crypto from A16C, that's where they're moving. So I think it makes sense why we're seeing, again, an influx into capital into crypto.
But I believe the influx of capital isn't actually an influx. I believe dollars are mostly down in VC crypto, right? Like VCs are cutting fewer checks and doing larger sums, but the number is down.
Yeah, definitely. Like if you compare it directly, like 101 with AI, people are going to be putting more money into crypto. Into AI.
Yeah, but I believe over the arch of all VC money, it's actually down in general.
It really is.
For crypto.
It really is.
Right?
However, I think it's really cool how some of these smaller fish outside of VCs, they're actually putting capital into companies. So here's an example, kind of what I was going to show earlier. So Deployer, he's the guy who built BankerBot, which is really cool. So Banker ecosystem, I mean, this is just volume, but I'm trying to find the post. Cannot find it for the life of me. This is from Deployer. He actually made a post about it recently.
Okay, so I was wrong. I asked Claude. Way up. 2025 was a year for crypto fundraising. Total raise was 28 billion, 60% up from 2022. So it's there. This year, it's on track to do about 40 billion.
So that's growing as much.
Yeah.
Like capital is growing in crypto now.
Yeah, but deal count is still deal count. I was right on this part. Deal count has actually declined 40%. So there's more money flowing in, but less people.
Okay, so that makes sense. I mean, that's just natural VC flow, I guess. They're not going to give their money to everyone, only to like those who prove themselves, I suppose.
It's institutional money. It's bigger rounds because they want to do it, and the space has matured, significantly.
Absolutely. So this is what I was trying to find. Deployer, who's the founder again of BankerBot, we're planning to launch the Banker Fund, where we invest real capital into top banker ecosystem projects, hoping to make our first investment in the coming weeks. It's pretty cool. I saw there were a few people here building their own thing, like this guy here. We're building Clerk, an AI native legal data layer on Base. 500 million plus US federal court records. Here's some examples via simple HTTP API launched on BankerBot. So that's kind of cool. It seems like BankerBot is this kind of engine. Mm-hmm.
Yeah, B2B, that's like a core B2B thing there. Like I could see a law firm wanting to pay for that versus, like having to pay a huge, massive subscription for that, paying, thousands and thousands of dollars a month versus you could just do HTTP every time you need it, and then you pay per request.
Yeah, so that's pretty cool. I couldn't find similar people. I mean, mad respect to this guy, like selling his product out there. Guess not many are doing that. But yeah, I mean, I guess the takeaway for this is people are putting their money on crypto, or I guess investments are coming into crypto again. Maybe smaller check quantity, but there's still capital there. So if you're building something in crypto, don't stop. Probably just echoing my own sentiment. Where are we at?
We're about an hour in. Do you want to keep going?
Yeah, maybe just kind of speed run through these last ones. So the last two that I want to talk about, maybe this is more newsy, but I think it's pretty cool. So you ever use Hyperliquid?
Not really. I think like it's hard to use in the United States, so
yep.
Not really used it ever, but some of it looks really cool for like the lending and like the DeFi apps, the EMV on it, but like I like their like buyback burn system and all that, but also Hype is, again, it's just hard to use. Like there's a lot of commodities and stuff on it.
Yeah, so Hyperliquid, all it really does is perpetuals on chain, which I forgot the gap that they were building, but the founder is a very smart guy who was in the Bay Area, and he, I don't know if he's in Singapore now, but he built this tool because he saw this gap and he worked at a financial institution, so he actually had that market founder fit, and I believe that's largely why this company is very successful. So recently, they're having some HIP 3 and HIP 4. I'm not exactly sure what that is, but I think it's very interesting. HIP 3 growth previously pushed it past. Well, I cannot talk anymore. So Hype has actually, like the value of the token Hype has actually grown in value since these announcements. HIP 3's growth previously pushed it past $26, and then the moment has since shifted focus to Hyperliquid X's next major upgrade, HIP 4. So it's just like upgrades in the protocol that is pushing the price action here, from what it seems. Not gonna go super into it, but I'm gonna ask Grok like if we can break it down more. Just because I'm learning along with you guys on this. I've used Hyperliquid like sparingly. I don't like the whole idea. Well, it's just a bit of a drag. I gotta use a VPN, kind of like Polymarket, and then access it, and then do all those perpetual trades, and then move my USDC in and out from there. So if we look at Grok, I don't know if you can read it. So
I was looking up. They're a Cayman Island company with a Delaware entity, but they are primarily out of Singapore, and then they have a corporate office in New York. But like, this is the same thing Polymarket did to, avoid U.S. regulation. So just a small part on it.
Okay, so the spotlight, the upcoming HIP 4 as the next catalyst, expanding into fully collateralized prediction markets and event-based trading for outcomes like elections, sports, and macro events, all composable with existing perpetuals. Man, everybody is just expanding on prediction markets, and it makes sense. It's like this new asset class at this point. Before it was some sort of commodity, little gambling thing people could do, but now, given its influence, it's actually becoming an asset class in of itself. So I asked it, what's HIP 3 and HIP 4? They were just improvement proposals, Hyperliquid improvement proposals. That's what HIP stands for. So HIP 3, build or deploy perpetuals, is what you could do before. It activated it in October 2025. It makes perpetual market creation permissionless, so it's pretty much on chain. And then HIP 4 is outcome markets, predictions, and event trading. So I'm guessing you can do perpetuals now, not just permissionlessly, but now on prediction markets, and it's pretty much it really. And it comes out It came out early 2026, May 2026. It introduces fully collateralized outcome contracts, a new primitive for event-based trading. That's pretty cool. No leverage or liquidations. Fully collateralized, lower risk profile. Damn, that's actually kind of massive. Because
yeah, I think this stuff is cool, and I think these prediction markets are interesting. I think once you take the sports out of it, I think there's much more interest for me. Like,
for sure.
If you can trade on like outcomes of wars and outcomes of all of that, like I think it makes more sense. I think when you layer in sports, it's just sports betting with largely no house. So like there's some more positives to it, but I don't like the sports betting aspects of prediction markets right now.
Well, I think it's a low-hanging fruit. Like they're just capitalizing on an existing business, part of like their business operations.
Yeah, which is fine. I think sports betting is an emotional thing, and it ruins more lives than it helps.
Yeah, I mean DraftKings and I forget who else. That's all they do now. Like, well, not now, but like they've incorporated prediction markets to stay ahead of business, I guess. They're actually making a lot of money from that too, so it makes sense. So yeah, I mean, if you want to read this more, here's like a comparison table on what HIP 3, HIP 4 is. That's pretty much it for hype. I think it's pretty cool. One that I highlighted. And the last one that I want to talk about is Solana's Alpenlow, I think that's how you pronounce it, which is a major consensus overhaul replacing proof of history. It targets 100 to 150 microsecond transaction finality, which seems to be like a 100x improvement. This is just based on what I'm reading on my notes.
Yeah.
Currently, it's in testnet with community validator testing. So it's kind of like the Robinhood chain earlier this year, where it was on testnet and people were testing on it, and it reached like 10 million in like the first week, if I'm not mistaken. Agave is a client, so that's pretty cool. I don't know if I've never heard of Agave. I thought it was Ave, but I'm guessing there's an Agave. And it's expected to roll out in Q3 this year. So why don't we talk about that for a moment? Do you use Solana?
Not really. Like, I've gone way more to just Bitcoin, more and more.
Yep.
Like, the Solana stuff's interesting, but they went heavy meme coin, and then now that they're making like a stable coin push, like I feel like Solana has just been kind of following the hype a little bit. So truthfully, what I'm waiting for is for all this to kind of shake out and see where a lot of this lands. I think this year has become the DeFi like decision making year for what actually ends up being good and what doesn't. Like I think Hyperliquid is going to come out on top for majority of stuff. Like I think Solana is an interesting like spot at the moment.
I do have some thoughts about that. I think there was a lot of speculation before, which is really all that we had at the time in 2021. Just because people were talking about, this fucking shitcoin that I made on, well, not on Pump.fund, that was later, but some shitcoins would come out and on Ethereum, and people would think it was going to be like Bitcoin, where it was going to just infinitely grow, and that wasn't the case. A lot of people lost money and were rug pulled, and I mean, obviously that hurt a lot of people. So now they're very cautious where they put their money, and this year has been very definitive whether people should rely on DeFi. I think it is more popular outside of the US and maybe outside of our bubbles because, people would talk about it's either USDC for payments, settlements, or Bitcoin. And maybe Ethereum or Solana, but people have their opinions. I mean, I have my opinions. I think the reason why Hyperliquid will succeed is because they're pretty much using crypto for what it is, for what I believe it is, which is making money more accessible, not having to settle payments in 3 days or business days or just waiting for market hours to open. Like you have access to liquidity whenever you want. And the way Hyperliquid is doing it with perpetuals and now with prediction markets, I think it's doing it very well. I haven't used the predictions market aspect for like Hyperliquid. But I think it's largely why it's going to succeed. And the same could be said for Polymarket and Kalshi whenever they adapt it into crypto, because they do plan to doing it on crypto as well. I think this is where crypto succeeds, you know, improving an existing financial aspect or an asset into its own technology.
Yeah,
so
I think it's going to become all infrastructure more and more.
Yes.
And I think that's why a lot of people are like, I'm out of crypto, because it's no longer just like a fun degen thing. It's no longer just a way to make money and do all of it. It's going to become infrastructure. When you buy a house, it's going to be a tokenized title to it. When you buy a car, it's going to be a tokenized title that the state runs. I think all of that's going to be there. You're not going to think, oh, my thing's on Solana. You're just going to go, oh, my car's title's tokenized on the Texas, blockchain thing. You're not going to know it's Chainlink or Solana or whatever.
Yeah.
You're just going to know that it's tokenized on there and that you have an ID number that it's tied to, just like your VIN. It's going to be a VIN that's tokenized on some blockchain. Same thing. You're not going to know, what currency. It's just like currencies. You don't pay it. You know it's U.S. dollar, or if you go to Mexico, it's the peso. In the future, you're going to be like, oh, I know, everything's tokenized on Chainlink, or everything's tokenized on Solana for this one thing. That's all you're going to know.
Yep. And I think that's what a lot of these retail people want outside of the Bay Area bubble. Going back to our point earlier. Hey, how's it going? I think we're seeing a post or a comment here on Twitter.
It was a couple minutes ago.
Oh, you showed it was a couple minutes ago? Oh, my bad.
It was 2:11 on YouTube.
Oh, shit. How's it going? Sorry, we didn't see it just until now. Appreciate all the comments. Let us know what you think of the cadence.
Yeah,
or
right-hand side on Riverside has a chat for you.
Oh, I wasn't even... I guess... Okay, I should probably expand and improve my little setup here, because I'm doing it on my MacBook, and, I only have one screen. And you saw my monitor, it's, like, massive, and I should be using it more. So anyways, I guess for now, just to kind of end this, I want to share this video that I found on Twitter from Solana, giving a bit more of an insight on Alpenlow. It's an interesting word. I'm guessing that's the version that they're improving to, kind of like how macOS has like Sierra and then Monterey and Tahoe, you name it. So anyways, I'm going to play this video. It'll tell us more about Alpenlow.
Alpenlow is our new consensus protocol, meant to lower finality with Tower BFT from 12 seconds to 150 milliseconds. We're also removing things like proof of history and moving voting off-chain, which will help eliminate vote transaction fees, which has been a large cost overhead to validators today. And so in terms of real-world performance, we've been running an Alpenlow testnet cluster for the past 8 months. In this cluster, we're measuring finality at 120 milliseconds. And the team is working really hard at getting this feature upstream into the Agave repo. We're aiming for a feature activation sometime in early Q3 with Agave version 4.1. Now onto Alpenlow. Alpenlow is our new consensus protocol, meant to lower finality with Tower BFT from 12 seconds to 150 milliseconds. We're also removing things like proof of history.
I guess it repeated.
Yeah.
Sorry about that. Okay. So that's kind of cool. Maybe Grok can tell us a little bit more about it. I use Solana sparingly at this point, but I wanted to get back into it with like Pokemon trading NFTs. I think something you mentioned like last week was, I think it was last week, how you buy a pack from Pokemon, or if you buy like a real Pokemon card, you can like mint it into a Solana NFT, and then you burn or you destroy your card, which may not be appealing for a lot of people, but I think that's a really cool concept. So I wanted to play with that a little bit more. So going back to this,
I do like tokenized assets. Like if you buy something,
Yep.
you can own it on chain, and it's the exact 1-to-1, and you transfer it, and you transfer that. I think that's really cool. I played Magic Eden sometimes and open like packs on Solana. That's kind of fun. But yeah.
No, I feel that. So what Grok said, I mean, aside from what it discovered in this video, what was discussed in this video, OX Brew, I'm guessing this is the person speaking. It won't show in my, it won't show me here. Accelerated APAC, event explaining the removal of proof of history and off-chain voting to eliminate vote fees and reducing validator overhead. That's pretty cool. This is aimed at engineering internet capital markets. The upgrade unlocks sub-second confirmations for high-frequency on-chain trading and applications needing near-instant settlements. I mean, I don't think this is possible. Like, near-instant settlements, that's never possible outside of crypto. So this is why I'm very bullish on it. But I think, to your point earlier, and what I'm starting to see more is infrastructure is going to be the real winner. People don't want to think about how many gas fees they're going to pay just to send their mom money or anything. They just want to be able to access this capital near instantly.
Yeah.
Cool. Well, I guess that's everything for this episode. Let us know what you think. We'll be around. If you guys ever have any suggestions for things you want us to cover, let us know. Like, you have access to our socials. You can find them below as well. Let us know what you want to talk about. Maybe if you guys ever want to jump on board and have a discussion. I think we can probably set up some sort of Discord and then have live calls with some of our audience here. So I think that'll be fun. But if you all are interested off of that, let us know. We'll be around.
All right, sounds good.
Great. Hope you all have a good one.